there's different kinds of taxes that can affect your estate plan. There's the estate tax, there's the gift tax, and income taxes often play a part of things as well. So basically, the estate tax is the tax that is due when someone passes away. Now, there is what's called the unified credit. Basically, unified credit is the coupon the federal government gives you. You can pass free from estate tax. So that's 12.06 million currently. It is indexed for inflation, so that will likely go up to probably 13 million next year. In 2026, January 1, 2026, that's set to reset to 5 million index for inflation. So that will likely mean that unless action is taken, the unified credit will likely land about $7 million in January of 2026. Now, as a married couple, you each have that coupon. So a married couple currently can give away a little bit over $24 million before the estate tax is a concern. Florida does not have an estate tax. Other states do. So you always have to be careful of those things on whether or not, let's say you own property in Pennsylvania. So you need to be careful that there is not an estate tax due in Pennsylvania if you pass away. Now, there's a gift tax as well. Gift tax is being taxed during life for money or property that is given away during your lifetime. Again, Florida does not have a gift tax. Other states do. IRS does allow you to give away $16,000 per year without it being reported to the IRS. Now, that's $16,000 per year per person. So if you have 5 kids, you can give $16,000 to each of those 5 kids without it being reported to the IRS. At that point, you have to file an estate tax return. And if you give away $18,000, let's say, to one person, the $2,000 is a reportable gift. So what that does is that $2,000 reportable gift reduces your unified credit. That is just something to keep in mind, especially as we get closer and closer to that January 1, 2026 timeframe. And if you're at a point where you are over $7 million, but less than 12, you're concerned about the estate tax, and there's things that we're going to need to do. Or if you have above the $12 million, then you may want to lock in that unified credit $12 million. If you don't use it and it goes down and then you pass away, that is the unified credit that applies to you. So it's going to be tricky in the next few years to figure out what Congress is going to do, whether or not they'll take action or not. But it's something to be mindful of and to be concerned about.